Good morning, traders. Chris Best here with Traders Profit Compass with another edition of Before the Bell, your home for actionable pre-market content. It is Wednesday, July 13th, 5:57 a.m. as I'm starting the video. And as always, please run your player at 1.5x. Not even really going to look at futures. I mean, they are what they are. We got the big CPI print at 8:30. So they're just kind of oscillating, waiting for that big print to happen, and then we get to react to whatever the market may do. So I'll have a few comments as we go along on that. But let's start out this morning with Bitcoin. I think Bitcoin is winding up to do something here fairly shortly. You see, we were in a big consolidation triangle for quite a long time. That built up a lot of energy, and when it finally broke, you got this a follow-up consolidation where it traded in a very narrow range for about a month, and then we got the next big drop, which brings us down into this zone, and you can see we've toggled from the high side of the zone to the low side, back and forth, back and forth. Now we're testing the low side of the zone after, quite a bit of market action in a very tight range. So I think some energy is building there. When we go down to the 60-minute chart, what I've done is drop in a bit of a channel if you want to use those as visual references. And here you can see, bottom, top. Now we're down here at the bottom, getting a little lift off this 19,000 level, back up towards 20. Depending on your view, if price can get above 20, then you're going to be back inside the channel, and you've got a tight trade location to take a long, even if it's simply to move up to the middle of the channel, which is up at 2150 and 21,500, and then possibly even back up to the top here before you'd run into another resistance level. The other scenario, of course, is this is just a little back test of the line and it rolls over. I would if I was going to try to play to the downside, I would put yourself an alarm at 19,000. On a break of that, you'd be looking for 18 at the prior low, and actually what I would expect after all this consolidation is if that it breaks, it takes the next leg down like we saw in that other example. But you can certainly play the upside like I described. I just think it's at a very interesting spot where it can break either way. I think if you watched some of the videos that I have passed along, in the draining liquidity environment, the QT world that we're in now, I think the odds probably favor a breakdown, but you can't really trade on that, right? You got to follow price, and we've seen a lot of instances where the price does something totally different than what the fundamentals might suggest. So I think that's an interesting setup on Bitcoin. If we jump through the oscillators, you can see that NIMO is right here in the middle. So is NAMO. Not really helpful at this juncture with all these little micro moves. It's not really moving the needle very far on our oscillators, so we're trapped here in the middle. Yesterday on oil, we had another big sell-off event down 8%. I think it was down a little bit more even. So on the first run, we broke this uptrend line, and that was the catalyst for the first drop down here to tag the 200, where we got the bounce that we kind of anticipated on that first touch of the 200, but now we're back down again for the second touch. And I think this is where price could be, pretty vulnerable. Second time back is usually a lot more important than the first time. The first time you come back to a gap or a key support level or a key EMA, you'll usually get that responsive bounce like we got. Second time, not so much. So if you're interested in playing this, you could use USO is the ETF that has options, or you can use those micro mini e-futures /MCL to trade this as well. But you're at an inflection point here right around 95. And, the fundamentals are all bullish. Nothing has really changed. Whether this is just, algo driven, or they're thinking Biden gets something out of Saudi Arabia in terms of a big production boost, I have no idea. I just know that from the price action, second trip down is going to be really important for this to hold, or else you could see 88, then 85 relatively quickly. So keep that on the radar if that's something you're interested in. Moving on to SPY. Not a lot of movement yesterday, down 0.88%. Kind of an oscillation day in front of the CPI print. One thing it did do was drop price down below the 8 and 20-day moving averages, and that's something you really don't want to see if you're bullish. So I think job one is recovering that. Come back up here, recapture 385, and then finally break out above 390, which coincides with the downtrend line. You can see 390, support, resistance. And so now if the market reacts positively on the CPI print, then you could see this recover and potentially break out. On the downside, I think you got to hold 375, or it really opens the door for a run down towards 370, where we have that open gap. If we zoom down to the 60-minute chart, you can see a lot better where these levels come in. If you're actively trading, we've got a downtrend line hooking these highs up, and now we broke out, and now we're coming in for we're near a back test of that. So I just want to lay out a scenario for you. CPI prints at 8:30, right? And for whatever reason, it takes a deep plunge. Say it comes down here, whatever, 376, 370, wherever it comes down. It's down here red. That will leave a big open gap above, right? And so we'll be ready for the gap. What I wanted to say is, if in the pre-market there's an initial deep plunge and say they start buying it up, what you want to do on your platform is mark that pre-market low, and then follow price. And if the regular session opens and it recaptures 378, I think that's your objective buy there. Now, the other scenario is it goes higher pre-market. You're going to want to do the same thing in reverse, is mark that high, and if it was fake and they start coming down, use your levels like this 381.50. If it breaks back below, then that's your short, right? And then you'll get your gap fill and then move down. So you can use your levels once the market opens. If you're recapturing levels from below, it's bullish. If you're losing levels from above, it's bearish. And just remember, there's a good likelihood that there'll be, either a gap above price or below price after, the pre-market action occurs, and we find out exactly where each instrument opens. But just remember, on these CPI prints, it's a lot like a Fed day. You're going to get a knee-jerk reaction one way or another. I wouldn't get all panicky, in the pre-market. If it does, I wouldn't get too panicky if it's red, and I wouldn't get too giddy if it's green, because a lot of times those first knee-jerk moves are faded. They're fake, and then when the big boys get on the field at 9:30, they take it to where they wanted to go all along. So moving on to the Qs, better technical posture than SPY. Why? Because we broke out of the downtrend line here, whereas on SPY we hadn't. We moved up, come back down. All we're really doing or have accomplished has been a breakout and a back test of 285. I think that's an important level. You don't want to go back below trend and back in here. That would open up the door for filling this gap and then moving lower. So I think this 285 level is relatively important. We've got a little resolution. You can see we took a drop down the other day. Yesterday was more or less consolidation, had a weak close. But here you see where 285 is. Really, what you've got is a high volume bar just below. So you've got what I'll call a zone of support from 285 to 282.50. We go in there, find support, and then move higher, or we don't, and we move down. We got a sizable gap here left to fill, and quite a ways down towards this prior low if they want to take it south. IWM, inconsequential day, down just 0.3%. Little doji here, but we're below all the moving averages. So on the face of it, that's bearish. We haven't broken the downtrend line, so that's bearish. We're still in this downward zone or wedge. I think your zone of support is here between 170 and 169-ish. You can see that there was some support in this area. So what I'd like to see is for us to hold this zone of value, the where we've got the high volume over price bars. You get much below 169, 168, that's really going to open the door for another move back to the lows at 164, and that wouldn't be so great. In here, I've just got the levels blown up. I could definitely see a move down to 167. Notice we had lows all along that line that all held. So that might be a natural target pre-market for them. If it's some type of a bearish print or taken bearishly, come back down to 167 and hold, and then have them try to buy up that big gap on the open. And so those pre-market moves can open up a lot of opportunities for you if you are aware of where the gap is and where your support levels are. That'll help you quite a bit. Meta, really just consolidation day yesterday. I think you want to keep your eyes focused on 162. That here we've got the large volume over price bar, and we had a lot of support in that 162 area. If you break 162, you could roll down to 158 very easily. Apple, one of the stronger FATMAAN names yesterday, up 0.7. We made a run at this old gap, got rejected, came right back down to 145. I think you can tell 145 is going to be an important level after this consolidation. Below 145, I could see 142.50 coming up really fast at this prior high. On the upside, I think a move above 148 opens up 150 and then 151 at the top of this gap. And if you go back, you can see we didn't quite fill it the last time, so that comes in at 150. So have that level handy. Nothing happening in Tesla. We had talked about 690 and 700 yesterday. Well, we had a big fake opening bar, and then they sold it right back down to 690. I think 690 is your easily identifiable pivot. You've got a level of resistance here around 700, 705-ish, and then you've got this trading range below that if you move below 690, I think you could move all the way down to 665 down at the bottom of this range. So that's that. Microsoft was the big mover yesterday. We had this double top. I did a measured move basically from the high of the top to where the base was, and then you can see that more or less this structure is the upside down W, right? Here's the left side, middle, and then halfway down the right side. So just the upside down W. When we're looking for double bottoms, we look for that W formation. Well, this is the reverse of that, and we've already broken this zone here. So this really needs to hold here at 253 to kind of, if that were to hold and this would bounce up, that kind of invalidates the structure. So it's going to be an important day. This is why, having your alarms, even if Microsoft isn't something you trade every day, if you're going to be watching FATMAAN, you got to keep it on the list because it doesn't happen all the time. Here it happened, but here it happened again. We opened up towards 266 and we ended down at 253. That's a big move. That is a day where you can really, really get paid. And the thing of it is, it wasn't all in one big gap. You could have had your alarms set, in this support area of 263, 263.50, 264, wherever you had it. And then you were good to go. I mean, all you had to do was make the trade, and I mean, I don't have to tell you, when you make going from 263 to 253 in just a few hours, how much of a payday that could be. And what I find is, if I get lazy, if I get sloppy, and I'm just looking at it without having those alarms, that's a great way to miss these big moves that come out of the blue. Now, why did it make that move? I don't really know. I heard the ServiceNow CEO made some comments on Jim Cramer the night before. I did not see really any big analyst reports about Microsoft. I did think I saw something where they announced they're going to do some layoffs. Not a lot, like 1,800. I mean, I think they employ hundreds of thousands, so that's like a drop in the bucket. But anyways, it is what it is. Keep this double top formation in your mind, and I would have an alarm below 253, because if you break that, then you're into this void, and you could easily come down and fill this gap, move down to 245, and probably even the prior lows down at 242 if things get ugly. I don't think it's going to do that independently. I think it would need some help with, if the broader market is falling apart, then you might end up seeing another big move like that. Amazon really didn't do much, but it did lose this 110 pivot. I think the bulls need to recapture 110 as soon as possible before it rolls down to 107 or potentially even 104.50. You can see that we're sitting right on the largest volume over price bar on the chart. So I think, if you're a bull, you definitely want to, if price moves back up and you recapture 110, I would be a buyer there on a look below, fail, recapture 110, and go. Otherwise, this thing is probably going to roll down to 107. Google, what was it? Down 1.43. Right down here into 2280. Notice where the large volume over price bar is here. I think this is vulnerable down into this 2240 type area. I would certainly, if I'm long right now, I certainly want to see that hold. But if the market wobbles on CPI, your next level of interest is going to be at this high volume over price bar down towards 2240, 2220 type area to look for support. Keeping in mind also it could come all the way back down to this trend line off of all of these lows. Now, if it can hold that, the key level is up here at 2365 to take out all these prior highs, and that would open up a move to 2500. Netflix didn't do a whole lot. I put in an intermediate support level here at 174. Happens to coincide with this uptrend off the lows. So you can see, for all intents and purposes, we've got a consolidation triangle going on. We may get one more thrust up into 180, and that would be an important place to watch, because if it can break out, then that could spark a rally. If this just rolls over here and drops out of this triangle, then I would expect this 170.50 to break, and then come back down and test the prior lows at 164. Semiconductors, just a little oscillation day, nothing going on here at all. Keep in mind you've got gaps above and below to be aware of. So we'll just have to see which way that's going to break. Same thing with ARC. It was positive 0.6%. ARC F, the financial one. I think it's got to recapture 1645 here. And then you got a chance for it to move up, fill this gap, and come back up towards these highs around 17. If it doesn't, very easily could roll down towards this 15.7 level and then 15.2. ARCG had a good day, up 2.44%. This is the daily chart. So remember, daily technical events are more important than 60-minute technical events. So we made a divergent low down here. That's positive. Here's the W. Now we've broken above the 8, 20, and 50-day moving averages. That's positive. We recaptured 34.50. That's positive. We broke above the downtrend line on the daily. That's a big positive. We came up to technical resistance at 38, where it found resistance, made a little back test of the trend line, and bounced off it nicely yesterday. I'd like to see you have an alarm at 38. If this, breakout back test go, you want to be a buyer at 38, because we will have taken out this prior low, and I think you'd find price up at 43 pretty quickly. So that'd be a nice $5 trade if that recapture of 38 pans out. Flagship fund didn't do a whole lot other than hold 43.5, which we said we wanted it to do. I think you can be long against 43.5. You're looking for 45.50, then 47. If you break this uptrend line, I think you could roll down here to 41.5 and potentially down here towards this open gap. ARC W still in this basing formation. I'm not messing with it in here, but you may well want to break that down into a 60-minute chart or a 15-minute chart, however you like to trade that, because we're right at the midpoint of the box. You can use that as your pivot at 52.50. Above, you're shooting for 59. Below, you're shooting for 46. And if you get that type of move on a 60-minute chart, if you're a nimble trader, that's definitely a wide enough range that you can profitably trade. So take a look at that. XBI came up to resistance, backed off. Here too, we had yesterday morning a deep look below where we came back for a touch of this downtrend line, and then they bought it up. So if we have a good reaction to CPI today and we break out above this prior high, we would be coming in to 87.50. And the thing that I want to point out there is highest volume over price bar on the chart. That translates into stiff resistance. And if I were long, I would seriously consider taking some profits there and then waiting to see what happens and either reestablish a long, step aside, or if you're bold, try a short against major resistance. I want to wrap up with Micron. semiconductor stock was working its way down, respecting this downtrend line. Then we had the bad break where it went from 66 down to 53, got a bounce, and then they had this big bar here was their earnings announcement where they sold it off hard, but then they bought it right back up and then right back up to the top of the range. I'd like to see you set an alarm at 60. Why? Because you've got a big void in the chart and you've got some room for Micron to run on that breakout. I wouldn't front run it. I'd wait for the signal. But if you got a breakout from 60, your first test is going to be the 50 at 64, and then a test of the downtrend line at 66. And if things move from there, a breakout above 66 would be hugely bullish. Why? Because you would be back into a very wide trading range, recaptured the large volume over price range, and then you'd have an open door up to 82, and that would be a nice one to ride up if we get some intermediate strength here after CPI, over the next several weeks. You're not going to get that move that fast. What I'd be very happy with as an intermediate step is to break above 60, get long, and play it up towards 66, and then fingers crossed that it can move above 66 back into the range where we can then establish a more of a longer term type chart. Now, when you're in there marking your alarm at 60, go ahead and mark yourself an alarm at 53, because what's going to happen is you're going to forget about it, and I think you definitely want to at least take a look at it if it wants to take a leg lower. If things really fall apart this summer and everybody goes crazy recession and all that kind of stuff, you don't want to miss the breakdown. So go ahead and mark your alarm at 60 and 53, and then you'll be all set for any eventuality. And while we're on that topic, that's what I like to do whenever I'm looking at charts and setting alarms. Look at you're first going to be looking at what you want to happen, right? If you think the market is bearish, you're in your charts and stuff looking for short setups, which is fine. You'll find your level and set your alarm. But while I'm in that chart, what I like to do is flip the scenario around, saying, where would I like to, what would change my mind? What would get me long? That might be a gap above. That might be, where some key moving average or key resistance level would be. And then I set an alarm there. And then that way, like in this example, I know that I visited Micron and I know I've got 2 alarms there. So whether I'm right about this thing breaking out or not, and we take a leg down, you're going to get that alarm at the same moment I am. So if that's a trade you want to take, then you're Johnny on the spot. You're right there, and you're ready to go. So when you're doing your charts, take the extra 15 seconds and set yourself an alarm on the opposite side. Always set yourself 2, and then you won't miss the moves as often. So let's wrap it up there. Remember, on the CPI print this morning, it'll be a trivia question. What was, everybody's going to guess what it's going to be, whether it's hot, whether it's cold, whether it's consensus. that's fine. But it's the reaction. It's the reaction what we're looking for. And the reason why, I'm bearish the market overall, but I think with all the sentiment washed out and the positioning washed out, I think the risk reward is to the upside. Now, does that mean I'm loaded with longs? No, you basically know what I have. But I've also got, all the FATMAAN names that I'm watching as well. So I want to be ready I'm going to be ready either way for longs or shorts today. But in general, what I'm saying is I'm not loaded up with puts ready for the end of the world, on August 1st. I think there's going to be real choppy trading, a good chance for a short squeeze, and then if the economy and things get worse into the fall, then be ready for the big leg down. So we will see that in the charts and be ready to take advantage of it. So let's wrap it up there. This has been Chris Buss for Traders Profit Compass. I really appreciate you spending time with me. If you're new to the channel, please hit the alarm bell and the subscribe button. Jump over in the show notes. You'll find a link to the blog site where you can drop in your email address. And then morning, noon, or night, I will send you observations, trade ideas, resources, videos that I found, etc., that you may like to watch and benefit from. So take the trouble to do that, and you'll also get an invite to our trading room. It'd be great to have you there. So let's see how CPI shakes out, and we will talk to you next time. Hope you have a good day of trading.